0.67%, just nudging upward pretty clearly, particularly after the Bank of Japan's move. One stock that we're watching at the opening bell is Micron, delivering disappointing guidance and outlining a host of cost-cutting measures to help weather a rapid decline in revenue. The company's CEO saying profitability will be challenged throughout next year due to oversupply still existing within the industry. How different a year can make. Joining us right now, Bloomberg's Abigail Doolittle. Abby.
Well, Lisa, this is not necessarily surprising because, of course, at the beginning of the pandemic, there was the supply issues that really put the chip makers and memory makers in a position of a boom. Well, with every boom comes the bust, and this has been it. The stock down sharply on the year, heading to its worst year since 2015. And the memory part of the chip industry is very cyclical. So this last quarter where they reported a lack of profitability or a loss, not necessarily surprising. And then that idea that they're going to stay unprofitable going into 2023, the guidance really kind of disappointing. They are looking at $3.6 billion to $4 billion for the upcoming quarter, the current quarter. The previous estimate had been at 3.8, so now the low end much lower than that. They're also looking at a pretty significant loss, 52 cents to the possibility of 72 cents. Gross margins just 6 to 11%. So it's this guidance that's really concerning that they're not going to come out quickly. This, again, though, is not surprising relative to memory maker cycles. This chart is really super interesting. What we're looking at here are the losses in the net income. What's not on there actually is DRAM pricing, though. DRAM, that's the memory for servers. Their other big part, NAND, for cell phones. But if we had the DRAM on there, it goes with the profit. So when DRAM pricing goes higher, their profits go sky high. Well, not surprisingly, over the last 2 years, Lisa, DRAM has coming down, and now we're looking at this move toward a loss. But there's going to be another boom on the other side of it. So let's wait to see when those signs emerge at some point in 2023, most likely.
Abigail, thank you so much. What comes up must come down, including in the auto industry, parts of the auto industry taking a beating. Tesla doubling discounts on its two cheapest models amid weakening demand. In CarMax, we've been talking about it all morning, plunging after the earnings that it reported were far short of already gloomy estimates. Joining us now, Bloomberg's Ed Ludlow in London. Ed, I want to start with Tesla and the discounts.
Sure.
How unusual was that? What was the indication? And what is your takeaway?
It is unusual. It's not part of Tesla and Elon Musk's playbook to do such an obvious and strong discount, $7,500 discount on Model Y and Model 3 through the year end in the United States. That's double what they were offering. You have to take into account the delay from the Treasury Department in line with the Inflation Act's new rules on battery composition and origins, which would have capped the tax credit available to U.S. consumers at around $3,750 anyway here in the United States. We're down for a fifth day on this stock, Lisa. Bit longest streak of declines since October, holding at that November 2020 low. The question we're asking ourselves, of course, is one of demand. Is this indicative of some slippage in demand? It's not entirely new insofar as that Tesla has cut prices and, as Bloomberg reported, cut production in China. And we asked the same question then. Of course, we'll have to wait until earnings in the coming weeks and months to get a clear communication on whether that demand story is changing. But it is something, of course, that Elon Musk kind of conceded in the most recent earnings call, that demand is a little harder to come by than perhaps historically it has been for Tesla.
How much is this a Tesla issue and how much is this an auto issue? And I ask this with CarMax in the back seat here, no pun intended, but really having to do with used cars, not new cars.
Yeah, I've had a busy morning.
I mean,
let me tell you, CarMax tough. The stock down the most since September, trading in April 2020 low. Huge miss on the bottom line. You know, what we've seen is this real reversal. Used car prices climbed and then they just fell away. Their wholesale business really suffered. If there was a bright spot for CarMax, it was that on the retail side, consumers were trying to seek out bargains and low-priced cars, but that meant their overall unit sales took a hit because they had to shift their inventories from the wholesale side to the retail side. A very clear picture. It couldn't be any clearer. There is an affordability issue. They said that last quarter. They've said it this quarter. Rising interest rates, high inflation, and low consumer confidence. And for me, like, it's been a strange 24 hours because I've completely forgotten about that US consumer confidence data of 24 hours ago. It seems like it never happened when you read the earnings statement from CarMax.
Ed Ludlow, thank you so much. It also, though, is contradictory to what we saw in terms of the revised GDP. Yes, it's a backward look, but for the third quarter, seeing personal spending, personal consumption come in higher than expected at 2.3% versus the initial two reads of 1.7%. Is it inflation? Is it disinflation? Is it deflation? Academy's Peter Scheer expecting inflation concerns to fade and deflation fears, outright deflation fears, to take over next year, writing, quote, the odds that we get at least 1 month of negative inflation data in Q1 is increasing. I do not believe that we will be worried about inflation in a meaningful way by the end of the first quarter. Peter, I'm pleased to say, joins us now. Always a fantastic contrarian view and one that I find well-reasoned and interesting. Peter, how much pushback do you get to your call?
I've been getting a fair bit, but just the previous segment that you were on, a couple of things. MRSP on new cars is actually, the average price was below that. So you're seeing what was first a used car issue start filtering into the new car. I think that's with Tesla. And then on the semiconductors, I keep harping on this issue that the disruptive economy was a powerful driver of semiconductor demand, right? They wanted chips, they needed servers, they needed all these things. And as funding is dried up for those types of companies, it's going to feed into that part of this sector. So I'm very bearish on Q1. I think we're going to have a much worse recession than consensus.
We were speaking with Mike Kontopoulos earlier of RBA, and he was saying, yeah, but, and that's what a lot of people are saying. We hear you on the good side, on the services side, on the wage side. You're seeing that inflation stay put and actually accelerate. How do you push back against that, particularly when you see that this latest revised data on the GDP shows that the core PCE, that key metric, was revised upward, not downward?
So I'm not so worried about current PC. Two things I look at is, one, a lot of people miss the goods equation, right? They mistook excess demand and pent-up demand for ongoing growth in consumption. That's already over on the good side. I think we're going to see a very similar thing on the services side. It's not going to be as dramatic, but there is a lot of catch-up. People haven't seen family and friends in years because of COVID, and certainly not at the frequency they once did. So there's a catch-up. I think some of that goes. And when I look at the jobs data, I think, yes, there's wage pressure at the low end, but I think where you're starting to see the firings and the layoffs are going to be these middle management type jobs, these $80,000 to $100,000 jobs, and those aren't going to be replaced easily. Those people are going to be out of work and looking for work in a struggling market. So this is going to be much more not just about number of jobs, but the types of jobs lost times the average wage. And that's going to be, I think, the disconnect people miss. They're going to keep looking at average wage of the overall market, which is rising, but that's driven by the low end wages right now.
I gather that you think the market is right in this differential between where the market sees the terminal rate and where the Fed sees the terminal rate. Am I correct?
Yes, I think the Fed, it's wishful thinking that they can get to 5.1%. They're going to keep, trying to harp on that. We've got 6 more weeks of data. I expect more and more earnings warnings, things like we're hearing this morning, are going to impact both actual inflation and the market perception of where it's headed.
So do you believe in this consensus call that we're going to have a bad first half with a really recessionary kind of conditions that lead to a positive environment for bonds, a negative environment for stocks, and then you get a reversal as we head into the end of the year?
So I hate to be consensus. So I think the only thing I can say is I think it's actually going to be worse in Q1 than people are talking. We're going to break through the lows of October and November on stocks. We're going to see new low yields. We're going to have a first really good risk-off type trade. So I think you see 10-year treasuries maybe down at 320, along with much weaker stocks. This is going to be a real recession fear. It's not going to be a minor recession. There's going to be a lot of discussion, and I don't think it turns around quite as quickly as people do.
Here's my pushback. The Bank of Japan. Everyone was talking about how they could see yields in the 10-year going back down to maybe 3.1%, which is far off where it had been, unless the Bank of Japan abandons its yield curve control. And it seems like that's looking more likely than ever. The market hasn't responded as much as I would have expected. Have you been surprised by that?
No, to me it makes some sense. I think the 10-year in Japan maybe should be 1.5%. So yes, the yield curve controls are coming off, but they're the one place in the world that really isn't experiencing much inflation. So I think it's telling that this is occurring. I do think there's some risk that Japanese buyers have been big buyers of dollar-denominated bonds, both investment grade and treasuries, that they then do FX hedges. So they might give some of that up, so that'll put some pressure. I just think the overwhelming economic data is going to be so bad and scary here that that's going to be what drives rates next year.
Okay, fair enough. What about China reopening? Isn't that going to give a boost if the world's second biggest economy reopens, as it will, and it will eventually get back up to gear once this initial surge in virus cases ends? Isn't that enough to create some momentum to keep it going? going and not necessarily cause the dire situation that you're painting?
I'm not sure how we flood the world with more goods that we don't already need is going to be that helpful. So yeah, if China really had strong domestic demand, that would be great. I don't see that being a huge driver. And I think all this continues to do is put pressure on the supply chains that we've already overbought. We've seen inventories go up. Everything I see in terms of retail sales right now is sale prices, discounts. I think there's still Cyber Monday discounts being extended for the third or fourth week, right? So I think things are very weak there. I don't see this China coming back online as any huge boom for demand. And I keep watching oil very, very closely, right? It's kind of the one thing that rules them all. All these things should be driving oil prices higher, and we're not seeing that right now. So I think real demand is dropping quickly.
What do you make then of Nike and FedEx earnings?
Again, FedEx had a really bad quarter, the last one. They bounced around. I think, listen, it's not going to be universal, and there are catch-up. There are things. There's where people are built. So I think this is going to be much more a tech-led problem. So it's going to be the flood of the problems with disruptive. I'm talking to some people, and if you go back to 2015, 16, the economic problems could be really, really tied to energy. That spread out to the rest of the world. I think we're going to see a very similar thing right now, and it's tied to big tech. It's tied to the semiconductors. It's tied to all those disruptive industries. So they're going to be by far the laggards, and other industries can do well, and there's going to be companies that do well in periods.
Peter Shear, you'll be sticking with us. Coming up, we'll have a discussion about the crypto universe. Sam Bankman-Fried arriving in New York.
If he's around, it may be easier for John Ray and the bankruptcy professionals to get more information from him. Having said that, if he takes the Fifth Amendment, then it might not be any easier.
That conversation coming up next, as well as the fallout in the crypto industry. This is Bloomberg.
I don't think anybody has any idea what the FTT tokens are worth or what the intrinsic value of FTX really is. I don't think anyone has a handle on the liabilities. We've heard 8 billion, I've heard 9 billion, and we've also heard a million different creditors. If he's around, it may be easier for John Ray and the bankruptcy professionals to get more information from him. Having said that, if he takes the Fifth Amendment, then it might not be any easier.
FTX co-founder Sam Bankman-Fried touching down in the United States and facing a host of criminal charges. The former CEO preparing to make an appearance in a Manhattan federal court today. Two of his associates pled guilty to fraud. For more, let's bring in Bloomberg's Sonali Basak. Can we just talk, Sonali, about the significance of his return to the United States and the widening web of people getting embroiled in these prosecutions?
Yeah, there are a few things to make of this. He arrived late last night. We were expecting him to appear at the court this morning, and we expect him to want to seek bail. That was part of the rationale at the end of the day for accepting the extradition that he initially planned to fight. Now, at the same time as he landed in the U.S. last night, you also have the U.S. Attorney's Office accepting guilty pleas from both Gary Wang, who was really the top engineer, former Google, over at FTX, and he is accepting counts 1, 2, 3, 4 of charges that included conspiracy to commit securities fraud, conspiracy to commit commodities fraud, wire fraud, and really the document here says the maximum sentence for that is 50 years of imprisonment. If you look at the charges that are accepted by Caroline Ellison as well, remember this is the head of Alameda, the trading division that is in question here. There's another 7 counts with a maximum 110 years in prison. Remember, these are two people who are cooperating witnesses at this point, and they have pled guilty to these criminal charges. How Sam Bankman-Fried pleads and how he looks to fight these charges when 2 of his top deputies are cooperating with the U.S. government will be a very interesting thing to watch how it plays out. Remember, there's already conflicting information between what Sam Bankman-Fried has said and what the SEC and CFTC charges say against him.
And there's broader significance to this story. We're going to be speaking about that with Peter Scheer momentarily. How much are you getting a sense of an acceleration in probes that go beyond just FTX and Alameda, Sonali?
Very significant. If you look at what Damian Williams, the U.S. Attorney's Office for the Southern District, said this morning, we are moving quickly and our patience is not eternal. All of this has come together in a number of weeks here, and it seems like it's been a slow-moving saga, but if you take a look at this, you already have 3 people who are brought under question here, and there's actually another person who in the Bahamas, we know one of his top deputies at the Bahamian subsidiary was the one who tipped off Bahamian authorities according to court filings. So you have the inner circle of Sam Bankman-Fried really coming to the surface here, and it only really took a number of weeks. So as far as FTX goes, this has been moving quite quickly, but a lot of questions unanswered, certainly behind how this happened from the beginning, how investors were misled, and perhaps that essential initial question we had is why was everyone accepting payment in FTT tokens in the first place?
Yeah, Sonali Basak, thank you so much. And we're going to stick with the cryptocurrency theme. I do want to just bring you this, that Senator Schumer of New York says the Senate does have a deal on amendments and a spending bill. So that's been in flux all morning, and that's the latest in that. Peter, I'd love to get your sense, Peter Scheer of Academy Securities, on the whole crypto fallout. We talked about how we all were surprised it wasn't a broader fallout in terms of price action for Bitcoin and some of the major crypto equities. Are you still surprised at the resilience? I'm looking right now at a very resilient Bitcoin price.
A little bit, though I still think we hit 10,000 before 25,000. 2 things that are supporting Bitcoin right now, I think, are the maximalists who are saying, okay, skip these other coins, put your money in crypto or Bitcoin in particular. And everyone, we're all greedy a little bit. You see something that used to trade at 60,000 is trading at 16,700. Maybe we take a shot. So I think there's that element that's been a bit of a support for it. We also talked about how these things take long. And 2 things that have really caught my attention the past week are the one accounting firm basically backing away from supporting, their accounting work that they've done with crypto firms, right? That to me is a big step, right? That means there's potentially more holes that are going to get filled. And then the weirdest part of this whole thing is Binance announced that they were buying Voyager's assets for about $1 billion. in theory, these are just crypto assets. Why can't Voyager just sell them, right? That tells me this market has not got anywhere close to the liquidity people think, and that's problematic.
This is interesting because we were all wondering what the significance of that Binance purchase really was. Are you suggesting that it was simply to cover a pitfall, a mismatching in the valuations of certain assets and where they actually would trade in a free market?
I think that's been the most difficult thing with a lot of these smaller cryptocurrencies where maybe only 5% of the float trades, but you've got this valuation based on the entire amount. And it feels like there's this huge effort to protect those. And that makes me nervous. And I think we saw a little bit of go on with what went on with FTT, et cetera, and those tokens. So that concerns me, right? Why can't you just go and sell $1 billion? It's not a huge number if it's spread across a bunch of crypto assets. It feels to me that there's a real concerted effort to hide how little liquidity there is in this market, which might also explain why Bitcoin's hanging in pretty well, right? It doesn't take a lot of buying power to support this.
We've been talking about how it's not just the crypto market, but it has a broader economic significance because part of the strength in certain tech spaces, in particular the semiconductors, came from the boom in crypto. Where do you expect to see another shoe drop on the broader sphere away from just the crypto-centric stocks that people talk about?
Listen, I think it's going to be anyone who's really involved in supplying the services that these companies needed, whether it's web services. I think you're going to see a slew of, hardware come on the market as these places go bankrupt, as mining activity slowly drops down. I think it's going to spread to the economy. I think you're also going to see pockets where they bought into real estate, where they were spending everywhere. And I think if you track some of those locations, whether it's the San Francisco area, even New York area, I think that's going to weigh on the economy. They were a disproportionate new wealth, and kind of time from our last segment where we looked at the energy sector, right? In 2015-16, wherever energy was concentrated, those places really suffered relative to the rest of America. And I think that's what you're going to see here is the pockets that crypto really benefited go down. I think Miami is going to face some problems, for example.
Peter Scheer of Academy Securities. We can continue on that point. Unfortunately, we are out of time. Have a wonderful new year. Thank you so much for all of your contributions. Right now, we are seeing the NASDAQ down about 1.8%, the S&P down 1.3%. Let's get some specific sector price action with Abigail Doolittle. Abby.
Well, Lisa, yeah, pretty significant decline here at this point for the S&P 500 as well, down more than 1%. Not surprisingly, all 11 S&P 500 sectors are lower. Up top, we have some of the defense sectors. They're down but outperforming, such as consumer staples, healthcare. You also have utilities there. On bottom, it's all about the mega cap tech sectors, down 1.5% to 2%. Technology down 2% there. Chips weighing and some of those other mega caps. This is a similar story to the week, but there is one bright spot on the week, and that is energy. Of course, the week is not done yet, but energy so far is one of the only sectors higher, up 1.1%. And then the worst sectors on the week, all about, again, those mega cap tech sectors, communications, tech, and discretionary, down the most, down 4.6%. This as yield back up in a big way. That 10-year yield up close to 20 bips on the week. That is pressuring those higher valuation, or used to be higher valuation stocks, Lisa.
Abigail, thank you so much. Coming up, the market-moving events that you need to be watching. That's next in our Trading Diary. Abby was just talking about the moves in markets, basically taking back a lot of the gains that we saw yesterday. This is Bloomberg. 26 minutes into the trading session, time now for the Trading Diary. What you need to be watching through next week. Durable goods and personal income and spending numbers. We get them tomorrow, plus the UMich Consumer Sentiment Survey and new home sales to round out the week. Markets closed on Monday for Christmas. Wholesale inventory is coming on Tuesday. And finally, another round of jobless claims on Thursday. Right now, we are continuing to see red across the board, with the Nasdaq down 1.8%, the S&P down 1.3% on stronger than expected economic data. This was Countdown to the Open. This is Bloomberg.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Thursday, December 22nd. Here are the top market stories we're following for you at this hour. Micron's macro message. The semiconductor giant cutting 10% of its workforce, warning on demand and profitability, while you had the third quarter GDP coming in really strong. We're going to get all the read-through here on the economy. And the China risk factor. China COVID cases explode. The country eases up on restrictions on international travel. We look at all the implications. And brace for impact. A historic storm hitting the U.S., crushing holiday travel, dragging parts of the country to below freezing temperature. We're going to look at the risk for the grid with Karen Harbert, President and CEO of the American Gas Association. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, I get it. S&P's off 1.25%, Nasdaq 100 off 2, but I'm telling you, all anyone cares about is the weather.
So is this the kind of road to Damascus moment? Have I finally converted you? Is this it? Are you now talking about the weather of your own volition? Are we there yet?
Yes.
This feels like the moment. This feels like a big moment.
I've never been against the weather. This is like going to crush Christmas.
You've given me a lot of grief over the last couple of years about talking about the weather. Whenever I talk about the weather, I can hear Alex snickering in the background somewhere.
It's true. It's totally true. But your weather doesn't crush Christmas. We're going to crush Christmas. It will crush Christmas. You can't get home.
We can crush Christmas
Pipes
all
will
our own. We don't
freeze.
need the weather to do that.
Well, that's true.
We've got train strikes and things like that. They're going to crush Christmas. Anyway, we'll talk about UK GDP in the next hour. You talk about the macro data today, which I think is interesting. It's macro versus micron. I think that is that I wish we'd come up with that a little bit earlier on, because the macro data is good, and the message from the macro data is the Fed's going to have to do more, and I think that is the takeaway kind of from this data. Once again, the data keep coming in. I'm going to be interested to see what the UMich data comes and looks like tomorrow, but I think the micron message, I'm not quite so sure. I think the CarMax story today is pretty interesting as well. You bought a used car right at the beginning of this process. What's it called again? I can't remember. But you bought a green car right at the beginning of this process when prices were really high. Inevitably, they were going to come off.
Yes, but and this is what I wonder if the Micron story and the CarMax story, et cetera, are just pandemic. We're just getting out of the pandemic cycle, right? Like there was a lot of demand and wasn't a supply, and now we're on the other end of that versus a macro signal. That I'm wondering if that's more of what we need to read into this.
Yeah, I think the signal on Micron is that they're in the commodity business and Samsung is churning this stuff out. Anyway, let's talk about it. Let's get a few smarter people into the conversation. What is the message from Micron? That is our question of the day. Joining us now here in London, Ed Ludlow, Kriti Gupta's over in New York. Ed, I'm going to start with you. You wrote the CarMax story as well, so let's kind of bring it all together. I don't think there's much signal from both of those two stories. I think CarMax inevitably...
You mean as the read-through to market?
Yeah. Right. I don't think there was... inevitably, there was going to be a used car glut that came through at some point. Carvana, we've already seen what's happening there. And I think Micron's in the commodity business. And
it is.
At some point, it was going to struggle. And with Samsung doing what it's doing right now, that moment has clearly come.
So to answer the question of the day, Micron's telling us that we are in a cyclical downturn, but that cyclical downturn is worse than feared, and it's going to go on longer based on the forward guidance that the company gave. DRAM, memory chips that go into smartphones and laptops, they were never really the chips that were in short supply. If you look at the commentary from the executives, this is the worst glut for these chips in 13 years, according to Malhotra, the CEO of Micron. The things that were in short supply are much more basic than that. The thing is, there's still evidence that the end user, which is, or the end customer, makers of smartphones, laptops, they've stopped ordering because they've got inventories to work through.
Is that because demand isn't there?
Because demand isn't there, but we've known that for some quarters now when it comes to smartphones. CarMax is interesting, just look at the words written in the earnings statement on the call. Low consumer confidence, hit by higher rates, high inflation, and this complete reversal of used car prices. There is evidence in that earnings statement that consumers sought out bargains, low price, but there is a real affordability issue, which is contrasting with the economic data, which is giving us a pretty rosy picture right now, and good economic data, bad news for markets, S&P 500 down. I think that's where we're at, right?
Well, Ed, I got to disagree with you. I was just told I'm allowed to do that on this show. Get ready. Brace yourself. I actually do argue that Micron is a bigger part of the story today. Let's talk about today's trade specifically, because if you look at some of the biggest index movers, and you can do this on your Bloomberg terminal, a lot of them are semiconductor makers. So there is a little bit of a drop in sympathy. Broadcom, for example, Qualcomm, Lam Research are some of your biggest movers and weights, by the way, on the S&P 500 on the day. And that's really coming from the Micron story, essentially them trading on sympathy. But I also have to ask, when we're talking about bellwethers for the U.S. economy, we like to look at FedEx, UPS, Caterpillar, et cetera. But in this new era where we're more dependent on data warehousing, where we're more dependent on social media, where we're more dependent on electric vehicles and that transition, a lot of the government money, for example, going to those causes, the chip story becomes more of a macro bellwether than, I would even argue, the shipping story or the Caterpillar story. And I think for that reason, this story really is moving the markets today.
So, yes, the CEO of Micron said the industry is experiencing a
its worst imbalance between supply and demand in 13 years. Now, it says from what you're talking about, you see that more of a demand picture than a supply picture.
Well, it's going to be both, right? Because on the supply side, this is the kind of COVID hangover that you were talking about, whereas this is really a function of the last 2 years kind of catching up to itself, this unsatiable demand. What he's talking about, though, is that in 2023, when, by the way, a lot of their manufacturing, Ed can probably talk about this a little bit more than I can, a lot of their manufacturing is starting to shift to the United States. They are the biggest memory chip manufacturer in the United States, and I believe just opened 2 new plants in this country. So that transition that you're seeing from China over to the U.S., I think this is a great kind of poster child for that.
Ed, picking up on that, and kind of extrapolating forward as well.
Sure.
I think there is something of a signal for Micron, and that is that it's getting worse. And you kind of just said that as well. There was maybe an expectation that this was going to be the quarter where they basically said, kind of, we're done. The things are going to stabilize.
We haven't bottomed out yet.
Precisely.
Right.
And I think that maybe is the message here, that actually things are continuing on a downward trajectory in the way that people thought, yeah, they kitchen sink the numbers, they're taking out production, they're taking out, they're looking at how they're going to deal with this inventory situation, and they'll probably get it done by the end of 2022. Yeah. That is now no longer the message.
Yeah, that certainly seems to be the case, but I would go back to, this is the 4th time this year that Micron has cut its guidance on CapEx and investment. It's already pulled back on production, and that's what I talk about this being a supply issue, because at the end of the day, there was this fantastic chart we showed a moment ago. You know, DRAM prices have also come down, which hurts margins a lot. At some point, you know, Micron has to react to what's in front of it. Who else is reacting to what's in front of it? Lovely pivot, Tesla. You know, interesting. Well, this is the chart. Okay, so, you know, we're bouncing around, but it's important. Far right-hand side of your screen, this is the first time in about 5 years that Micron's posted a quarterly loss. But look at the white line, which is a pretty sharp drop cyclically in DRAM pricing. So at the same time, they're dealing with a flood or a glut of supply and dropping prices.
And that looks like, if you look at the cyclical story, that looks like it's bottoming.
Which is not the messaging.
Which is not the message.
You know, and Kriti is 100% right on the sense that we use these companies as bellwethers, as a crystal ball, a lens into markets, because their customers order in advance. Different to a company that serves a consumer directly, like a Tesla, which, as we reported, is offering a $7,500 incentive.
That, I think,
So, but getting back to the conflicting parts of the data, and then what is the read-through from that? So, when we talk about margin pricing and finding a bottom, like, we're not there yet, we get that. But do we know what the lead time is? Like, does the economy bottom first, and then we get the semis doing better if we're looking at it from the demand side? Or does or does Micron have to bottom first and pricing have to bottom for us to get more positive on the economy? Do we know that kind of correlation, Kriti?
I would argue it's the Micron that has to bottom first, and you can actually widen it out and look at the equipment makers specifically. So Applied Materials, for example, ASML over in the Netherlands, those have to bottom first. Then you kind of see Micron and the other chip makers bottom. Then you see the rest of the economy kind of come to a stop. It's almost like a frame within a frame kind of story, but because each kind of sector or sector level has a more magnified effect. So think tech is going to drop X%, well, chips are going to drop by a factor of 2 on top of that tech. The chip makers by a factor of 3 on top of that. That's how I would kind of look at it. So if you start to see Micron bottom, and when then Micron turns, I think that's a good sign that the economy will be soon following that lead.
No, fair enough. Guys, fun conversation. Really appreciate it. Ed Ludlow, Kriti Gupta, appreciate your time today. A good roundtable on that. Great way to set up the next 2 hours of our programming. Coming up, we're going to talk more about the question of the day with Nomura's head of cross-asset strategies, Matthew Rauer. He's joining us next. This is Bloomberg.
The top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
I think that this problem that we've had in tech is not a sentiment problem. It's an earnings problem, and it doesn't last for 3 or 4 quarters. It lasts for 6 or 8 quarters. And a lot of these big tech companies that 2 or 3 years ago we said they have moats, they're impenetrable, and we talked in those terms. A lot of those companies are getting closer to total addressable market, whether that's in handsets or advertising or other things like that.
All right, Jonathan Golub of Credit Suisse weighing in earlier on Bloomberg Surveillance. Back to our question of the day. What is the message from Micron? Joining us now, Matthew Rao, who's head of cross-asset strategies over at Nomura. Matt, great to see you. Thanks for joining.
Thanks for having me.
Is there a macro read from Micron?
Yes, and it's not a good one. I think the main takeaway is that they pre-announced in mid-November, and the stock was down then. Since mid-November, the pre-announcement, I think they're down a little over 20%. So the news was somewhat priced in, but it got a little bit worse today that they weren't able to contain it even more.
What do you think about CarMax as well? Let's just roll that in too. And how does this all relate to these companies' credits? Take a look at what is happening with the equity. You get maybe a signal. Does the credit signal give a better signal?
Yeah, I think they're all woven together, really, and I think the main name of the game for 2023 is going to be credit. And when you think about what's impacting CarMax and what's impacting Micron, it's a combination of 2 factors that are interconnected. One of them being cost of capital for consumers, and the other one just being general demand for material that Micron puts together.
So, but how do you read it in terms of then positioning? So, whether or not it's an economic signal, supply versus demand, but from an equity signal. Like we were speaking to Linda Dussel yesterday, who said that her clients still want to buy growth stocks. And it feels like then the Micron and the CarMax is like the death knell then in the growth stock world.
Yeah, I think a lot of growth stock investing is based on hope at the moment because many people are looking through whatever this recession ends up being, whether it's mild or severe. I think the look through from CarMax and Micron give us some input as to the depth of the recession that we'll be facing. But I do think that being constructive on growth stocks and momentum is a very heroic move at the moment. And I think it's one of the reasons why we're seeing call prices as high as we are, because buying calls on growth stocks is a better risk-adjusted way to get exposure than just buying the stock because you have all the downside risk.
You talk about the options market, so let's just talk about kind of what's happening with volatility. Why is vol so low? And does it continue?
Yeah, I mean, in the vol world, it's been a tough year. If you've just been long volatility and relying on volatility expansion to make you money, you have not done well this year, unless you had a very disciplined approach to rehedging and monetizing. The reason being that with long vol positions, you need a very fast and sharp move to monetize, and you have to capture that. So those that have just been persistently long vol without a well thought out plan have actually lost more money in what we call decay or theta than they've made in the downward move. So it's been challenging. We haven't seen the spikes in the VIX. We haven't seen these sort of abnormal dislocations. And really volatility is all about pricing implied distribution of stocks. And it's been downward, but it's been more orderly than most sell-offs of this level.
There was a piece in the Bloomberg that talked about JP Morgan Hedged Equity Fund had a lot of call options at the strike of 38.35, and that the gamma effect from that, if stocks go down, then it has to buy a lot, and vice versa, is going to be huge this week and next week. Is that actually happening?
Yeah, so it coincides with the seasonal effect of Christmas and New Year's and in the holiday season in general. Attendance is light, liquidity is low, volumes tend to be low, and the size of this particular trade, which is well known in public, does have an impact. And basically what it ends up meaning is that the counterparts that are trading this transaction will effectively have a containment effect to equity pricing. So barring some other exogenous force to push the market up or down, like Micron, like CarMax, that may be it. We're going to see some pressure.
The bigger picture in all of this, as we think about, as you say, coming through to year end, going through Christmas into New Year, and then starting afresh at the beginning of next year, Matt, is do I believe the Fed?
Yeah.
Do I believe the Fed is going to take rates to circa 5%, maybe a little bit north, or do I not believe the Fed? Where do you sit on this one?
Yeah, I do believe the Fed, and I think that people should take them at their word. The words are chosen very carefully, maybe more carefully than anybody else in the market, to steer people toward what they want them to do. I mean, I think they know that the market is going to price in what they say, and I think they get frustrated sometimes when they see, you know, on the warp screen, when you can see sort of the apex of the hill, they get a little frustrated when it looks too optimistic, and they tend to talk it back down a bit.
So to that point, I mean, it feels like everyone we talk to is looking for a softer first half and then a better second half.
Yeah.
What's the biggest pain trade now related to that as we head into next year?
I think it's growth stocks. I think if
okay,
you
so there's still stuff to be priced out of growth.
I think so. I mean, I think when you look at, you know, with interest rates at zero, the present value of anything is equal to what it will be in the future as a discounting function. And when you start to take rates up, especially for non-profitable companies, it gets pretty ugly from a fundamental perspective. So you really have to have some not only opinion that they're going to succeed, but you have to see a path to profitability. And looking at that for most of these companies during a recession it's hard to see that path. So I think it may be a market call to say that they're going to bounce, but I think it's a tough one in the long term.
So puts on tech. Where am I getting my calls? Where am I putting those?
Well, I would buy calls on value and calls on more high demand, profitable companies that will be resilient, maybe not, you know, a multiplicative effect. And maybe the multiplicative effect thing, I think, is a big point here. Investors in a zero interest rate environment got used to no yield and replacing yield with equity beta. And they especially liked things that could multiply, not just accrete. So we're sort of getting off of that addiction to zero interest rate, free ride on risk. And that's why I think 2023 is going to be the year of credit, because most investors haven't had to contemplate rising implied and actual default rates, you know, eroding credit markets, widening credit spreads. So it's going to be an interesting education and path for investors this coming year.
It's a nice way of saying
have a great holiday.
Thank you very much.
Have a great holiday. Thank you very much indeed for your time. Matthew Rao of Nomura. Grazie mille. Thank you very much. Still ahead, Sam Bankman-Fried expected to appear in a New York City courtroom this afternoon, facing an 8-count indictment. We're going to get the latest on the FTX fallout. That story is next. This is Bloomberg.
Got that all day yesterday.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Lisa Mateo. Shares of CarMax sank after the company reported quarterly earnings that fell short of Wall Street's already depressed expectations, deepening concerns over the weakening U.S. used car market. The Richmond, Virginia-based company says adjusted profit was 24 cents a share in the third quarter. That was significantly below the 65-cent average of analyst estimates compiled by Bloomberg. CarMax's net sales of $6.5 billion also missed analyst projections. Tesla is offering a $7,500 credit and 10,000 miles of free supercharging to U.S. customers who order a new Model 3 or Model Y by December 31st. That's according to its website. The car maker was previously offering a $3,750 credit for certain Teslas as part of changes to federal tax credits for EVs under the Inflation Reduction Act. And U.S. authorities allege fallen crypto titan Sam Bankman-Fried defrauded investors in his FTX empire, stealing billions of dollars over years for his own benefit. He's expected to make his first appearance in Manhattan federal court today. Top Bankman-Fried associates Carolyn Ellison, former CEO of Alameda Research, and Gary Wang, co-founder of FTX, are accused of helping him. They pleaded guilty to federal criminal fraud charges and are cooperating with prosecutors. 30-year-old Bankman is facing an 8-count indictment. His lawyers may seek bail. And that's your Bloomberg Business Flash. Alex.
All right, Lisa, thanks very much. Let's stick with the FTX fallout. We heard from the Southern District of New York yesterday.
The Southern District of New York has filed charges against Caroline Ellison, the former CEO of Alameda Research, and Gary Wang, a co-founder of FTX, in connection with their roles in the frauds that contributed to FTX's collapse. Both Ms. Ellison and Mr. Wang have pled guilty to those charges, and they are both cooperating with the Southern District of New York.
Well, let's get more on Sam Bankman-Fried's future. We're joined now by Bloomberg's Sonali Basak. Sonali, are we surprised by this? What was your take?
This has been months of speculation here now about how his deputies would handle the case. We are now watching two of them plead guilty on multiple counts here, and they are very serious counts. Both of them have pled guilty now to wire fraud, as well as a series of other counts as well. We have Caroline Ellison. There are 7 counts, including conspiracy to commit commodities fraud, conspiracy to commit securities fraud, and conspiracy to commit money laundering. A maximum sentence of the series of these allegations here would be 110 years in prison, so life, really. But they are communicating, they are cooperating with prosecutors here. We separately, in addition to the federal criminal charges, you do also have them looking at SEC and CFTC cases that really accuse both of these defendants, Gary Wang, who is really the top engineer, a co-founder of FTX, as active participants in the scheme by Sam Bankman-Fried to defraud equity investors, as well as defrauding customers on the platform over a number of years, really since the beginning of FTX, which, as we know, conflicts in a very large way with a lot of the statements we've currently heard from Sam Bankman-Fried publicly. As for Sam Bankman-Fried, we expect him to appear in court this morning. Some of our colleagues are down at the Southern District at the moment. They've seen family members arrive already, and so we will hear how he pleads. We will hear his case for bail, and of course we know now that a lot of his former colleagues are now cooperating with prosecutors.
Yeah, how much worse does it make it for Bankman-Fried that we do see his former colleagues cooperating? And what we've learned so far, how does it change the trajectory for him as a result of particularly what Ellison is saying, I think?
Listen, you have Caroline Ellison as well as Gary Wang here, but you also have Damian Williams, the U.S. attorney, coming out and saying, we are moving quickly and our patience is not eternal. So he is calling more actors out to make his case, and we will watch it play out. It is now playing out far more quickly.
Sonali, great stuff as ever. We'll look forward to the coverage coming up a little bit later on. Plenty more still to come on this story, I can assure you. This is Bloomberg.
hour into the U.S. trading session. It's getting seriously ugly here. Bloomberg's Abigail Doolittle is tracking these moves. Abby, 1.6% off the S&P.
Yeah, it's pretty amazing here, and it sort of feels like it's out of nowhere because yesterday we had that rally. In fact, 2 updates for the S&P 500, but now we have another light volume decline for the S&P 500. But to Alex's point, a pretty serious one, down 1.7%. And you can see on this board, it really has everything to do with technology. The NASDAQ 100 down even more, down 2.7%. The New York FANG Index down a solid 3.5%. And then the chips, and we'll be taking a look at a couple of those movers in a moment, down 4.7%. So big declines here. Now, one stock on the move to the downside on earnings is, of course, CarMax. Shares are sharply lower. We can see that decline over the last 2 days, really down. If we were looking at the percentage on a one-day basis, it's down, the last time I looked, about 10% or somewhere thereabouts. So a pretty ugly day for CarMax. They missed sales by 9%, profits by 63%. They are having issues in terms of, they're talking about the vehicle affordability concerns for investors include solvency concerns. They are looking to rework their debt. So this stock, lower in the capital structure, is lowered. As for some of that technology weakness, let's take a look because it is really pretty ugly. Micron, of course, they put up a messy quarter. They reported a loss as opposed to a profit. That, of course, is one thing weighing on the shares, but their outlook a little bit disappointing as well. They're cutting headcount by 10%. It also seems as though this is a boom to bust company, for particular around the memory, the NAND and the DRAM. So DRAM, NAND pricing coming in over the last couple of years, that's been weighing on profitability, and it looks like 2023 could still be a part of the bust. NVIDIA down in sympathy, chips down 6.6%. And then you can see here, Guy, some of the big other tech companies, Apple and Microsoft, also down sharply. It could have to do with that better than expected the economic data that we have had today, the revised GDP up a third time, and then also weekly claims in a little bit less, reiterating the idea that the Fed may in fact be very serious about continuing to hike. If that happens, it could create issues for stocks.
Absolutely. Abigail, thank you very much indeed. Let's talk about what the signal we're getting from the metal market is right now. Europe's largest copper producer posting strong numbers yesterday. The initial market reaction fairly negative, but I think everybody working through the numbers comes to the conclusion that we are seeing strong demand. Arubis was able to offset a surge in energy costs that have hit other metals producers in Europe. For a look at what 2023 has in store for the commodity and the company, we're joined by Arubis' CEO, Roland Herrings. Roland, I read through your numbers yesterday. I looked through what you were telling us about the demand story, and you had a pretty positive message to deliver. Yet the macro data that I'm looking at the moment signals that Europe and probably the United States heading in towards a recession next year. Can you square what you're seeing on the demand side and what the data, the economic data, are telling us about where we're going next?
Yeah. No, thanks for having me in the session here. And no, I'm very pleased to report yesterday the results, which were the best results in the company history, achieving a record EBT and also strengthening our balance sheet. If I look at the position and the situation forward, I'm very positive about the demand for the metals that we produce, and specifically also for the copper, which is our main metal, because these metals are so essential for the transformation to fight climate change and to electrify, decarbonize our industry and our mobility. So therefore, I see, and also with today's view, a very solid, strong, growing demand for what we are doing. And this combined with a trend in all regions, Europe and North America, to circular economy, to use more recycling materials and to ensure that these raw materials stay in the economy and recycled back in a quality level that makes them suitable for the second use or any further use, is really leaving me with a high confidence that we are set well for the future.
Roland, in the short term, the warnings from Micron, just taking a look at profitability, having to cut staff, warning about demand, is there a read-through from that to the copper sector, since copper is used in all that technology stuff?
Yeah. We see a very solid demand, and we see some weakness in some sectors, but therefore, if I take, for example, the automotive industry, overall numbers in production are subdued. However, the content in the cars which are using plug-in hybrid technology or full electric technology, their metal content, their copper content is significantly higher than the conventional combustion engine. So we see a very strong compensation effect to lower numbers that we see. And the same is true also for other market segments in industry. So I think our industry, our copper and also metal industry, what we're doing is on a very positive side of the whole economy these days.
Roland, what do you see in China? How do you think that reopening is going to work? What does it mean in terms of demand for electrification? But what does it mean for the housing market as well?
That's a really big question and difficult to answer. There are so many information from China, which I have to admit, it's very difficult to draw this to a conclusion. The fact is China is the biggest copper market and metals market that we have worldwide. And the influence in China, housing, everything, will be significant for the whole world. The opening policy, the news that you hear are quite scaring because infection rates are going up significantly. So it will have an impact, but allow me not to speculate how big or small this impact is. We are focused on Europe and North America, and here again, that's the countries, the regions where we operate, and there is a solid, strong demand, as I said already before.
Well, talking about where then you operate, Roland, going forward, if you were going to put money somewhere to build out resources, would it be Europe? Would it be the U.S.? I'm trying to get a sense as to where you're going to be focusing your money, because Europe's been much harder hit about the energy crisis than other regions.
Yeah, so we have announced just 2 days ago our accelerated growth agenda. We are investing and decided with the supervisory board to invest another 530 million euros into growth, into our growth agenda. And our total portfolio of growth projects is now 1 billion, of which more than 600 million will go into the US to build up a recycling circular economy there, a plant in Georgia, with a second phase already announced the day before yesterday. But also 400 million will go into Europe. So we see strong demand in both regions, and we are not doing either or. We are investing in both because we see growth and potential for our company in both regions.
All right, Roland, we got to leave it there. We have some breaking news. Thank you for coming on. Roland Herring, CEO of Airbus, joining us now. We do have some breaking news for you. According to a person familiar with the matter, Guggenheim's Scott Minerd has passed away. He just has died. That's according to a person familiar with the matter. Shonali is on set with us, walking us through all this. What happened?
It was extraordinarily unexpected and sudden. He is in his early 60s. We had heard from our sources that he had passed away suddenly yesterday, late afternoon. We had heard it was a heart attack. We are just getting details as we speak. This note to employees just went out, according to our sources, to Guggenheim employees. Remember, Scott was one of the most vocal people in the fixed income industry. He's not just closely tied to Guggenheim, but his many years over at Credit Suisse, First Boston, and Morgan Stanley, even longer than that, and Merrill Lynch. This is very sudden and sad news.
He was quite literally a giant of a man, a giant in the industry. You sat down next to him. He was a really big guy, and he had a really outsized effects on this industry. Just talk about his legacy, Shonali. Talk about the impact that he had.
Just tremendous. Remember, he was one of the most vocal critics when it came to some of the Federal Reserve policies throughout. And that is just in the bond market. To your point here, also, he had always been very thought-provoking here. He had made very bold calls, which is what he was known for, from everything from the fixed income market to the Bitcoin market. And the idea here with Scott, and I've worked with him for almost 9 years now, the idea with Scott was always to jog ideas here. And so he was also a philanthropist. He had tried to spend a lot of time when it came to the wildlife preservation, when you look at Alaska as well as Europe, I believe in the Icelandic region. And so you do have a very interesting person here on Wall Street that will be very, 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 very sorely missed.
Yeah. And if you're just joining us, the breaking news that Scott Minerd of Guggenheim has died. Yeah, where does this leave Guggenheim?
Well, he is certainly the face, the heart, the beating soul of the investment management division here. This is a more than $200 billion investment management division that really he was a very core member and founding member of. He has deputies there, such as Ann Walsh, who is kind of a giant in the fixed income world in her own right, longtime insurance executive as well, very close to the assets and the liabilities inside of Guggenheim. But again, Scott was the face, like as I was saying, and the beating heart of Guggenheim Investment Management. Now, Guggenheim Investment Management is one part of Guggenheim Partners, which also has a securities division. Remember, this group of people here includes Mark Walter and Alan Schwartz. But again, this asset manager was really led in large part by Scott Minerd, whose personality was larger than life.
In terms of kind of key man risk, how important here is a guy that had a massive impact not only in the company but on the whole industry. We appear to be we thought we were moving away from a world where people like Scott Minerd dominated. These are kind of the legends of this industry. And I'm just kind of wondering, as we see Scott pass, as we see other legends step down, how the industry is changing. Is this industry becoming less charismatic, do you think?
Yeah, I would say so. I think back just about a week or so ago, I was talking to him on the phone to speak for a profile of Credit Suisse First Boston and the resurrection of its investment bank. And he was one of the most critical. He said, you know, they would be better off having shed the Credit Suisse name and making it First Boston again, because that was what was valuable. Remember, the reason we turned to him so much is because he had no holds barred. He always spoke what he was thinking, and it made him somebody that was very rare in an industry that is so afraid to speak. Guy, you know, we have the statement now out from Guggenheim as well. Guggenheim Investments had 900 employees here, 900 people that were led by Scott Minerd. Mark Walter, who is the head of Guggenheim Partners itself, said he's known Scott for over 30 years. And so, yeah, I mean, even he acknowledges in the statement here that Scott has really been a very pivotal and very vocal part of the firm. You know, it's interesting. It says here Scott's role changed over time so greatly because Scott became the public speaker for the firm. It's interesting. A few weeks ago, we were also reporting potential deal talks when it came to Guggenheim as well. We had large European firms looking to buy Guggenheim itself. I've reported on this for a long time. Others have looked at buying a stake and whatnot. And the question you have about key man risk, it always came down in our minds to what does Scott do in a new organization if that kind of thing were to ever happen. Guggenheim Investments now will be continued to be co-led by its co-presidents, Dina DiLorenzo and David Rohn, and Ann Walsh, who is the fixed income head that I was talking about there. She has been a leader at Guggenheim Asset Management for 16 years. And, you know, the deepest condolences to Scott and his family. And they will say more in the next few days, according to the statement.
Sonali, really sad news. Thank you for breaking it down with us. Again, if you're just joining us, the breaking news, Guggenheim Scott Minerd has passed away. He died suddenly on Wednesday afternoon from a heart attack during his regular workout. Scott was 63. Back more to that breaking news. Guggenheim Partners reporting that Scott Minerd, managing partner and global CIO, has died. He died Wednesday afternoon from a heart attack during his regular workout. Our condolences and best wishes to his friends and his family during this horrible time. Scott Minerd was just 63. Right now on the phone, we're joined by Bloomberg's Scarlett Fu, who knew Scott Minerd quite well. Scar, what's your reaction here?
I'm still in shock. I can't believe it. He was so young, 63 years old, and really at the height of his influence and his ability to shape market thinking. He was really an original thinker, one who was not afraid to go against the grain, push back against the consensus, not afraid to make big calls. I think we all recall some of his calls about Bitcoin getting to $50,000 and also not afraid to admit when he was wrong as well. I have very fond memories of him, particularly when I asked him to share a story from his youth. We called it a big money mistake, and he went back in time and thought about how he had made this property investment when he was at his first job at Price Waterhouse. And he really framed it nicely for the audience who knows him primarily as a market commentator, as someone who speaks with Fed officials and talks to big investors and is brought out to speak with clients. He talked about how he was not as smart as he thought he was, and all the knowledge that he accumulated in college, at business school, and at his job did not really pan out when it came time to actually put his words into action in making this one particular real estate investment as a young 20-year-old man with his first job out of college. And so he shared about how that was very humbling for him, and it really caused him to think about how he would go forward with being much more skeptical, much more questioning of conventional wisdom.
Scarlett, I remember watching that interview, and I have to say, it did make me smile listening to what he had to say and his candor speaking about that. What do you think made him the kind of person that was able to speak his mind on such a range of subjects and so often hit the nail right on the head?
He talked to lots of different people. He always gave them his full attention and really listened to their rationale for what they were thinking about, and took into account where they're coming from, their lived experience, and folded that into how he examined and how he assessed the broader world around him. I found him extraordinarily thoughtful, and he did not come at you with any sense of preconceived notion about this is who you are and therefore this is how you should think. He really listened to everyone that he came into contact with, and I think it's easy to say that people do that in this industry, but it doesn't always come out that way.
No, not at all. And I should point out, Scarlett, so Mark Walter, Guggenheim Partners CEO and a founder, in the statement saying, I have known Scott for over 30 years, and we were partners much of that time. Scott was a key innovator and thought leader who was instrumental in building Guggenheim Investments into the global business it is today. He will be greatly missed by all. My deepest condolences are with his husband, family, and loved ones. Also joining us to talk about this, Tom Keene, Bloomberg surveillance anchor, interviewed Scott nearly every Fed special, also knows him quite well. Tom, we were just talking about the idea generation that Scott would infuse within Guggenheim. Talk me through that experience.
Well, it's not only Guggenheim, Alex, but this goes back quite a way. We have to remember that Mr. Minerd, through just sheer brilliance, had the joy, like Scarlett Fu, of retiring at 37. And this is a guy, to say he was a bond king barely describes his acclaim and thought process at bond transactions and linking it into broader macroeconomics, which is what he did in the 90s. I think the most qualified person on Scott Minerd would be Bob Diamond of that era. This was in the European credit markets, and what Scott Minerd did was magical and hugely profitable for the firms he was associated with. I believe, Alex, he retired 7 times. I'm making jest of him just so he could see his beloved Dodgers. But the answer is this is a guy who couldn't retire, and he came back and he helped build Guggenheim.
But Tom, he spoke with a clarity that was rare. And you do wonder whether there is a generational shift here that is taking place. He is sort of emblematic of a period in time of a series of characters within this market that felt that they could speak. Well, why do you think that made him different? He felt he could speak.
I said this on radio moments ago to Paul Sweeney and Matt Miller, which was the absolute distinguishing feature of him and why he was so different in our Fed coverage as well, is this guy wasn't some fancy CFA. He wasn't some fancy degree, even though he came out of Wharton. I'll give him that. He was a CPA. This is a guy who approached the business with the rigor of a certified public accountant, and that's what made him a different guy every step of the way, every step along the way. His ability to do the critical thinking process different was absolutely unique.
Hey, Scarlett, having known Scott for such a long time, can you talk me through your experience of Scott as a managing partner and CIO at Guggenheim and how instrumental he was? I mean, infusing that kind of environment is quite difficult. I'm wondering how successful he really was at it and sort of how then it continues on.
Yeah, I think he set an example at the firm, and as Tom made clear, his credentials are different from others in that he did the hard work, he did the nitty-gritty work of going through the numbers, looking through balance statements and income statements, balance sheets and income statements, and questioning every line item, and taking a bottoms-up approach to investing, and also looking at the numbers and really assessing it from a numerical standpoint, as opposed to based on gut or feeling, or I don't see this, I'm not comfortable with this. And I think that comes through in everything that Guggenheim does as well. They really carry on his legacy in that regard.
In terms of where he leaves Guggenheim, Scarlett, where does he leave Guggenheim? This is now a business, a shop with a name that is intricately associated with him. Where does the business go next without him?
Yeah, they're going to have to find someone who succeeds him as the bond voice, as the global macro strategist, as the preeminent thinker at the firm. I think they've also had some issues in the past with just overall drama at the top, which I think becomes more complicated with his departure because he played a stabilizing role at the firm. This is something that will need to be worked through, but my guess is they've already started that process because they had some of those issues in years past.
And just to update everyone on the breaking news, if you're just joining us, Guggenheim Scott Minerd has died. He died Wednesday afternoon during a regular workout. Really sad news. Our best wishes to his family and friends. Tom Keene, Scarlett Fu with us to break all of this down. Tom, in your large experience with Scott, where does Guggenheim go from here, in your opinion? Who are those leaders that can really take this on?
There have been successful boutiques along the way. What's so not sad, but the reality of a boutique from where we sit at Bloomberg is you can sort of figure out, you know, I'd like to be collegial and say in the first 90 days, but maybe it's the first 2 weeks or the first 2 hours, whether the independent project of strong-minded people is going to work. And from the distance, Guggenheim worked from day one. And that was Alan and the rest of them that made it work. Now, where Scott figured into that, I think Scarlett's more up to speed than I am. But what he brought was the bond credibility and the way he approached problems, whether you agreed or disagreed with Scott, and trust me, he and I disagreed on Bitcoin to a fairly well, but whatever the process was, Alex, he brought an original critical thinking skill to that. Again, I would say because of the rigor picked up at Price Waterhouse years ago.
We really appreciate both of you spending some time with us to talk through this. Tom Keene, Scarlett Fu, thank you both so very much. Just to recap that news for you, Scott Minerd of Guggenheim, managing partner and global CIO, died suddenly on Wednesday afternoon from a heart attack during his regular workout. Mark Walters, CEO and founder, says he has known Scott for 30 years, and they were partners for much of that time. He calls Scott an innovator and thought leader, really instrumental in building out Guggenheim Investments into the global business that it is today. We at Bloomberg here offer him our deepest condolences, his family, his friends, and loved ones. Scott Minerd was 63.